welcome back. My schedule has been hectic this week, but the least I could do is provide you guys with the most popular topic this week. Now, before we get into that, we're going to look at the Bitcoin reserve charts, giving us an indication of the continued demand that goes on for Bitcoin. Now, just to remind you, the dark line is the Bitcoin reserves and the white line is the price of Bitcoin. Now, as you can see, the continued adoption has led to another small dip over here at the bottom right of the screen. And this is only expected due to the amount of good news we have been having. But a lot of people in the crypto space have been asking themselves, why is the price not moving? Or why does the price not reflect the amount of good news that we're having? And in my opinion, a simple explanation would be over-the-counter trading. Now, what over-the-counter trading is, it's a tool typically used by larger investors or institutional size investors to purchase Bitcoin directly from an exchange without actually using the blockchain to keep the price down. Now, this is a trade that goes on behind the scenes, but with the transparency of the crypto space, we can still see how much Bitcoin is leaving these exchanges or how much crypto in general is leaving these exchanges. And I believe that is why we have a little bit of price suppression, because these transactions typically don't show up on the blockchain. We just see the reserves continuously dwindle down to a dangerously low level of scarcity. And if anyone was wondering where I get these charts from, this one is brought to you by Crypto Quant. You can sign up and gain access to all of these charts you see for free. It is a metric I use to gauge the sentiment of the crypto space, and it is pretty helpful. Highly recommend. Now, this week, Australia has made the headlines in the crypto space for what I would say US traditional investors and Wall Street altogether are jealous and envious of. First, Australian spot Bitcoin Ether ETFs go live next week. And now this was all due to 21 Shares partnering with ETF Securities team to bring crypto exposure to the country while American regulators drag their feet. And that have been the story since, I believe, 2018, when the first Bitcoin ETF tried to go through the SEC. Now, they have been denying it for some time now, but the last time I remember the SEC denying an ETF with a valid reason was due to the lack of custody for institutional investors. They wanted some structure in the custodial department, which I cannot blame them. That has long gone been taken care of, and who knows what they are denying ETFs for. Traditional investors want it. Retail investors really could care less. We're still buying out of pure conviction, and we believe that this asset class is the new wave. Now, about Australia, this is not the first time they have shown their positive crypto stance in past regulatory due process to get their economy and get their citizens included and plugged into the crypto space. They had also passed a bill last year, if I'm not mistaken, to peg a stablecoin to their national currency for use of micropayments and things of that nature. Whatever the citizens want to use it for, it is at their own leisure. Now, just a little bit of background on the company that are launching these spot ETFs. 21 Shares, which has products listed on 10 regulated European exchanges, will feature 2 spot crypto ETFs. And yes, that is correct. Another spot ETF for the win. I believe Canada leads the way in the amount of ETFs launched for Bitcoin and other cryptocurrencies across the nation. And they're only showing the US how passing crypto regulation is done with clarity. The firm's pair of ETFs are set to launch the same day as a fund proposed by Cosmos Asset Management, which intends to invest in shares of a Canadian Bitcoin ETF. Now, as far as open market interests, there have already been word that there is $1 billion that will be pledged to these spot ETFs when they open next week. As you can see right here on April 27th. Now, reading this portion right here, the ETF's 21 Shares Bitcoin ETF, that is a mouthful, and the ETF's 21 Shares Ethereum ETF, which track the price of Bitcoin and Ether in Australian dollars, are fully backed by the respective assets held in cold storage by Coinbase. Now, this is the most favorable ETF, which is the spot ETF, due to the fact that the assets are bought and backed on a one-to-one basis by the asset manager, which is very likely to push the price of Bitcoin as long as things are well. A lot of regulators, a lot of institutional investors stated that we need ETFs passed in the US, which I don't understand, to push the price of Bitcoin. We already have ETFs in now Australia, we have ETFs in Canada, and we have ETFs in 3 other countries as well. So there is no lack of liquidity or institutional investor interest here to speed up the demand of an already scarce asset, which is Bitcoin, Ether, and a few other cryptocurrencies as well. Now, what does this mean for retail investors? In my honest opinion, absolutely nothing. This truly just shows the continued adoption, the continued demand of crypto assets into traditional finance. They see how profitable the class is. They see how hard the asset is. And by hard, I mean sound in its fundamentals and providing value and transferring wealth. But that is basically all that it means for retail investors. I don't see why we are not at a 50 or 60,000 plus Bitcoin right now. This is currently the longest accumulation period in the history of Bitcoin. So I can only anticipate when we are in a legitimate bull market, we will see some heavy price appreciation that people probably won't understand because, one, they either missed the news like this during the downtrend. People typically don't want to see the good news in the downtrend. All they want to do is see the bad. But that is what the downtrend is for. You collect the good news, you set your purchase points, and when it goes up, you sell high. And when it goes down, you buy low. It's that simple. If there is anything you would like me to expand on, please let me know down in the comments. If this is some content that you like, go ahead, hit the like, hit the subscribe, and also hit the bell so you can get notified every time I come on the net. That will do it for this one, ladies and gentlemen. I will catch you all on the next one.